Hey, everybody, and welcome to another episode here at Tribal Trades, the daily show. And today we're going to talk about the levels that the SPY must hold to avoid a bigger sell off that we saw yesterday. Also, the Bank of Japan rate hike decision is likely to go approved and go higher. We're going to look at what has happened to SPY and Bitcoin historically, as well as I'm going to give you a trade of a stock that I think has been performing quite well amongst all this choppiness and craziness and uncertainty that we have in the markets because of the Bank of Japan rate hike and what the market potentially has done historically. So before we jump into all that, of course, smash that like button. This does help get this channel out to more people. I appreciate all of you who take the time to fill those comments down below before those pesky spam bots do. I really do appreciate that. And of course, if you're new to the channel, welcome. Make sure you subscribe and hit that bell notification so you don't miss out on the daily updates there. We're going to jump straight into the SPY and we're going to talk about what happened yesterday and the last few days. So first and foremost, we saw that drop down to 1674. Which I had said that was a level you could short it to and then long it back up to that 679. That's exactly what happened. And then in yesterday's show, I warned of coming down and hitting that 674 again, and we did exactly that. However, in the pre-market, currently price has rebounded and we're back at that key 674 level. Of course, if we cannot break above the 674 level, we go below the 9 EMA on the weekly. I'm going to show you this here. Now, we're currently there at 674, just right on testing that. Now, of course, we haven't really lost the 9 EMA for more than a week. We were a week under, and then back we were the following week. And I do want to show you that when we do lose the 9 EMA, there, as we saw here, we saw 1 week and then we saw a second weekly candle. So if we see those 2 weekly candles, then the 9 crosses the 20, and that's where we see these big moves to the downside. So this is an absolutely crucial level to hold here at 674. We'll come back to the weekly chart in a moment here. Now, if we reject at 674, then the next levels down is going to be 667. Yes, 67. Sorry, I can't help it. That's where the level is. It is what it is. And 663 that is down there. There is options expiry on Friday. If you don't know what that is or what that means, I would encourage you to upskill yourself and educate yourself. We don't have time to go into all that today. But the max pain level for that is 661. That means for those who have options expiring tomorrow, that is where there would be maximum pain if price went down to that level. That would cause losses for those. That's that's why it's called the max pain price, 661. And so that's also a potential that we do come down a little bit lower. That doesn't mean that we're coming to 661 or guaranteed. Of course, we could go the other way, but I do expect some more uncertainty, choppiness, bearishness through to at least Friday there. And of course, we have the CPI data coming in today at 8:30 a.m. Eastern Standard Time. By the time you're watching this video, it may have already come in. Now, remember, this data is only for half of November, and it can't compare to October because there was none in October. And so take it with a grain of salt. That's potentially why the market is maybe jumping a little bit in the pre-market, but that could very well be sold off at the market open or later today as people, maybe de-risk. Depending on what happens with the Bank of Japan. And it is likely that there will be a rate hike. I want to show you what has happened historically when there has been a rate hike. We're going to go down to the last 3 times that this has happened. The last time that it was happened was here in January of 2025. Now, the market initially kind of spiked up a little bit there, and then we capitulated to the downside. Notice we had this double top over here, just like we have over here, a bit of a double top there, okay? And of course, there was a little bit of a sell-off leading into it, a little bit of a pump and then a sell off. And we're seeing something very similar here. We saw a bit of a sell off, a pump, and now we're seeing a little bit of a sell off there. Now, some people will say, hey, this is going to be priced in because we knew about it from the beginning of December. And yes, that's a fair comment. Maybe it is priced in, but I don't think it's fully priced in, number one. And then secondly, it may not be as priced in as we think. It really depends what the market closes like to today. We could because historically we've seen a 5 to 20% drop. So let's look at what that would look like here. A 5% drop would take us down to around about 654, round about just below that 663 level there, round about that 656 Fibonacci level. A 10% drop is what we've seen in the past, also would take us down to 619, and obviously a 20% drop would be fairly severe. That would take us back to 554 there. And I'm not expecting that big a drop because I do think something in the realm of 5 to 10%, I think would be a little bit more realistic there. Maybe that 5, 6%, 6, 7%, somewhere maybe a little bit in between. Okay, so that's what we saw. Now, you could argue, yes, some of this was tariff related, and it was, but it was also just right after they raised their rates. The previous time was here in July, and we saw a drawdown there of the SPY of around about there. We saw that around 9-10%. This is the 20% drawdown. That's why I'm thinking it won't be as severe, because this was heavily influenced by the tariffs as well as Bank of Japan. We had a bit of a double whammy. And then the final one, the last, well, not the final one, but the three that have happened, and this one was the smallest drawdown there. That was around about 5 to 6%. Now, there was one in 2007. That's how far we have to go back, was 2007, and that was a long time ago. We're not going to go back to that one, but that had a drawdown also between that 5 to 10% level, which is why I am favoring that 5 to 10%. And we already, I believe, have seen some of that drawdown. Yes, I do believe some of this is already priced in. What have we seen so far? The drawdown currently down to was 2.55%. And so some people say, hey, that's priced in. So it's partially possibly priced in. I do think this bounce may get sold off, even if the CPI news is good. That may potentially get sold off. But the line in the sand, guys, the line in the sand is 674. It's the 9 EMA on the weekly. You can see this entire run that we've had has been guided as that has been its support all the way up, and we haven't lost that more than 1 week. If we were to close Friday below that, and then on Monday open and close again, then I would think we're in for a bit of a deeper correction, and maybe around that 10% level would be incoming there. And a reminder, that 10% level there is going to come in around about 9 to 10% level is going to come in around that low 600, about 625. That would be quite a severe drop down from there. But let's look at it. What I think it's more likely going to be somewhere in that 5 to 6% region if history plays out as it has previously. Remember this also, that the yen cash carry trade, and again, I'm not going to go into that here for the sake of time. You can Google that. A lot of it, analysts believe 75% of those who were going to sell on the Bank of Japan interest rate going up have possibly done so already, and they believe 75% of that. So maybe this is all that there'll be. Maybe this little dip here today, maybe tomorrow will be all that there is, and then Monday it'll be back to business as usual. Remember, we had the Santa rally, and the Santa rally historically has given us returns from December 26th to January 2nd, has generally been some quite good times in the stock market there. So I am thinking that any kind of a drop will be brought up, and maybe somewhere between that 5 to 6, maybe 9, 10% at the most. That's what I'm looking at. I think we'll at least get down to 5%, but let's see what happens over the next couple of days. Of course, Tesla had been crushing, and in the Tribal Trades Discord, we put the shorts on and we went short on the SPY, we went short on Tesla, and we went long on Meta. I want to show you how those played out. Of course, the Tesla trade played out beautiful. This is the 2x leverage ETF of Tesla. That means when Tesla goes down, this ETF actually goes up, and you can make money to the upside there. That was a great trade there for Tesla. And I had warned of the bearish divergence on Tesla. Everybody was asking me for entries up when it was up here at 490, and I warned you all yesterday of bearish divergence. And look what happened as it plummeted down to $467. That's why we took the short in the Tribal Trades Discord there. You can make money on the way down there as well. And you can see the meta trade that we took went up yesterday. There's Tuesday. That was a great trade for those that took it. And then we did a short on the SPY, but we traded the 3x leverage ETF, inverse short, bearish ETF. That means when the SPY goes down, this goes up, and we took a beautiful entry there at 36, and that went all the way up to $37 yesterday, just showing that you can make money on the way up and on the way down. The Tribal Trades Discord. And look at these beautiful signals here from the Tribal Trades indicator. Look at that. This is a leading indicator. It gives signals for bullish reversals. Yeah, it takes the guesswork out of, shoot, this is dropping. When's a good time to get in? This has really nailed. It doesn't quite get the bottom. Listen, it gets pretty close. And, as I say, those who try and pick bottoms get smelly fingers. And so we don't try and pick bottoms, but we just try and get as close to the bottom as possible. I'm fine to get this on the way back up. I don't need to get it right bang there on the bottom, as you can see. But again, the Tribal Trades indicator, one indicator rule them all, and look how accurate there's that red dot bearish reversal, boom, to the downside there. Absolutely incredible. I did say I had a trade for you. Here it is here, Palantir. It's a very simple trade. 179 long above 179 to the upside, and then below 179 short. Below 179 short, super easy, lemon squeezy, can go short to the downside. We've got support there at 177 and 173, and down to 169. And of course, to the upside, we have technical targets to the upside there of 181, 184, and 190. So a very easy play. And I give both directions for you today because it's quite possible you can make money both to the upside and to the downside, just like we saw with the SPY the other day. Was incredible. We actually were able to make money on the way down and on the way up in the same day, which was quite nice. There you can see that same day candle. It went down and then it came back up again, down and then back up again. So on the same day, you could go long and short on the same stock and make money both to the upside and to the downside there. If you want to learn all of that and more in the Tribal Trades Discord, you can see we have the Tribal Trades indicator that comes exclusive with the Discord there. You don't have to pay extra for it. The Tribal Trade System, a full trading course where I teach the Tribal Trades method and ways of trading there. We have the 1K per day challenge. We have all these wonderful channels to connect. And of course, all the beautiful trade setups that we have here, chart setups, crypto plays, stock plays, swing plays, long-term plays. We're going to be a new channel, earning plays. I can't wait for that. And of course, our weekly stats channel there, where all the data from all of our plays, our high win rates, 86%, 92%, there, 100% actually for that week. And as each week's data comes in, I'll continue to update this channel there. And of course, you have one more week, and then the Tribal Trades Discord discount goes away. Right now, it's a $15 discount. Make sure this is already picked for you. So unless you want to pay more, which you can, of course, but this is already chosen. All you have to do is leave that chosen, click join the waitlist. Yes, you still do have to join the waitlist there, but you won't have to wait for very long. You get access this month in December, and how you do that is below in the description of this video. You might need to click the more button, and then the description will pop out. You click on the link, it'll open up that page that you just saw there on the screen. You fill in your details. You do have to add your payment details, but you won't get charged until you actually get added to the Tribal Trades Discord. Remember, there's one more week. It will expire Christmas. there, and you can get that $15 per month discount. And listen, that's not just for 1 month, that's for every single month there. You get that all access pass to the Tribal Trades Discord. There aren't tiers at the moment there. That gives you everything. In the future, there will be. We have another Tribal Trades indicator coming, likely just before the week of Christmas. It is scheduled to be rolled out. I can't wait for you to all see that second indicator that we have coming, and we have more planned in the new year. Well, that's all we have time for today. So until the next episode, or until I see you in the Discord, happy trading.